Hello, everybody. This is Elihu.
And this is Peter.
And you're listening to Pineapple Chunks. Last week was pretty uneventful, so we were able to get at least some stories for you guys. One of those stories is are organ supplements the next collagen? And the second story is who would win in a fight, Jeff Bezos or Elon Musk? Actually, do you want to talk about Wall Street bets?
No, let's talk about Wall Street bets.
Let's talk about Wall Street bets.
I'm sick and tired of these fat cats in Wall Street dictating the terms of when we can and can't buy. And so is Elon Musk.
So Elon Musk has made a huge presence in all of this, from Doge to Bitcoin to Gamestonks to Clubhouse. And he even called out Vladimir, the founder or the CEO of Robinhood.
We have a little clip here when it started.
The stock impaler.
So this is Elon Musk
hey thanks for
and Vlad on Clubhouse.
It's good to hang with all of you.
All right, Vlad. What really happened? Give us the inside scoop.
Spill the beans.
All right. Well, I was actually hoping that you would invite me up for the Fermi paradox part, because
so anyway, they had the conversation. We're not going to play the whole thing, but still, like, in a gist, this guy Vlad, he went on the news and everybody saw it. Everybody who was trading these stocks, AMC, GameStop, you saw it. He basically did some PR crap. He didn't explain the situation well enough. He didn't have a discussion about, or honest discussion, opening up the fact that they had a fundamental problem with funding their admission to trade with this clearinghouse, which ultimately stopped their ability to pay for the ability to trade these stocks.
Yeah, it was very reasonable. The reason it all happened, why the halting happened, it's all very reasonable. It's a liquidity issue. They were a startup. They didn't have that liquidity. But the way they executed
it's not
it,
a liquidity issue. That's the problem. That he was like, it's not a liquidity issue, but they had to take a credit line to basically.
It's totally a liquidity issue.
Yeah, right. That he just didn't.
It's 100% a liquidity. But they didn't say anything when it happened. They waited till Sunday, or not even Sunday. I don't even know when they actually said it. But they gave it like 2 or 3 days, and everybody was just upset and confused. And I mean, that's terrible PR. That's not how you handle a situation like that. Ooh. You cut off buying to millions of retail investors. They're gonna get pissed, man. You gotta explain what you did and why you did it.
Maybe we should give a little bit of background of what we're talking about for anybody who's listening and doesn't know we're mentioning. So Wall Street Bets, the famous Reddit page, got together hundreds of thousands of investors to purchase stocks in GameStop,
also known as the meme stocks. Well, GameStop was one of them, but yeah,
that's definitely the leading one. That's, I think, where the majority of the money is going. Mm-hmm. But yes, AMC, Nokia, all these other ones, BlackBerry, they're getting some attention, and they're also raising in prices. But the whole reason that people are buying GameStop all of a sudden is because of deep effing value. This guy realized a couple years ago that hedge funds were shorting the company 130% of its value. So, and if for those of you who don't know what that means, shorting a company means they're betting that the company is going to go down. And you're basically 130% shorting a company, which is like, how can you eat 130% of a pie? There's only like 100% of a pie.
And if you guys haven't noticed by Peter's whacking of a magazine, he's really upset. And so am I, because it's kind of messed up.
It costs us money.
It costs us money. I mean,
it was so screwed.
It costs us money, and it's also kind of it's screwed how these hedge fund managers can just decide, because they have so much power with all the money that they have to play with. They can just decide to make a company go to shit, and they shouldn't be allowed to have that power. And if they are going to have that power, then there should be an alternative force in the stock market, a yin and a yang, to counteract that. But once that appeared with the help of this subreddit, we get shut down. I mean, dude.
Yeah, so basically this guy, he was like leading the movement in a sense, buying up call options, buying up stocks, and countering the hedge fund's massive short position. And basically when you're betting a stock is going to go down, ideally, you think that people aren't going to buy the stock because they don't see any value in the company's prospects for making a profit. So ultimately, this guy goes on Wall Street Bets and gathers an army, shows his position, shows his conviction, and ultimately starts actually putting up a fight with him and his money, and then all the Reddit community of Wall Street Bets to counteract this short position. And ultimately, if what happens is that if you're betting for a company to go down and suddenly the stock shoots up like tremendously, like from $40 to $400,
all those short sellers are going to have to sell or buy back the stocks
at a higher price because they're wrong. They lose. They're basically losing money. And maybe we could go into it, but it's a little complicated to explain.
Yeah, I mean, this is essentially what you guys have been hearing on the media. It's a short squeeze. That's what we've been trying to artificially create. And a short squeeze occurs when a stock or other asset jumps sharply higher, forcing traders who had bet that its price would fall to buy it in order to forestall even greater losses. Their scramble to buy only adds to the upward pressure on the stock's price. Right now, the squeeze has not been squashed for GameStop, but that is the goal. That is the end goal. And Deep Effing Value, you guys can think of him as the cult leader. If Wall Street Bets was a cult, which, I mean, it essentially is. It is a cult full of a lot of meme enthusiasts. And Deep Effing Value is the rowing kitty on YouTube. He is the cult leader. He's got over he's made millions so far.
He's made like 30. I think at the peak he was at like 50 million.
Because he's been in since the very beginning. GameStop's.
He's talking. Here's a thing he says: "Hello, soldiers, autists, and retards and females." Not my words, his words. I've noticed that too many. Okay, I'm not gonna say that. Asking why is GME dropping and when should I sell? To clarify your paper-handed shit's concern, the squeeze is yet to come. It hasn't begun yet. And so he's leading this movement, and it's not really him who's manipulating the market, but he's definitely like encouraging people to understand that, you know, the war isn't over and that the short squeeze isn't, it's only the beginning.
Well, he's not manipulating the market either.
Well, he's not doing anything out of the ordinary because for example, a lot of people bring up Bill Ackman, and Bill Ackman is a famous activist investor. I'll pull up a picture of him. And he basically shorted the market right before the virus, the big pandemic that occurred. And this guy, he basically was betting the stock market was going to dip. He put a bunch of money saying that I bet the stock market is going to go dip. So he shorted it. And what that ultimately is, I was bringing it up again, what shorting is like, and I have a video on this. You can go check it out on my channel. But basically, he borrowed shares from other people, like actual stocks, and then he sold them immediately on the market for a high price because the market hadn't dipped. And then he went on live TV and he started saying everybody needs to shut down. He started scaring people, used his media attention and his influence to basically get more people freaked out about closing down and shutting things down, saying that there's not gonna be any hotels open anymore. There's not gonna be any ability for people to go out at all because of this virus. And ultimately, he made a ton of money when the market dipped really hard and you know the shit hit the fan. And that's it's kind of similar. It's very similar because he was going on live media TV, like actual broadcasted television, which is, you know, syndicated through YouTube. But this guy's just using a chat forum and he's doing the same thing. But in this case, it's like for a different reason. You know, one is Bill Ackman is like, you know, he's like scared. He's like saying he's super worried. And then he's also, you know, profiting off of the fear mongering. But this guy, Deep Effing Value, is saying these hedge funds can't short a company for more than what it's actually worth. Like there isn't 130% of anything. There's only 100%. And that's gambling. That's beyond gambling. That's irresponsible. So his movement is saying these guys have been getting away with this type of behavior since the 2008 financial crisis, and they're doing it again, being irresponsible, and this can ultimately drop the market. And so we basically have to combat this and show them a lesson, make them go bankrupt. And the Reddit community and really through him have put more than $2.8 billion in losses from the main short seller, Melvin Capital. If you haven't heard of them.
They've made a lot of history, and it's power like this, like Ackman and Deep Effing Value, that that recognition, that clout, that makes them market makers in a sense. They just create so much influence in the market and power that they are essentially manipulating the market in a non-direct way. I mean, Elon Musk, I think, also does that. Elon Musk is actually more direct because everything he tweets just turns to gold. I mean, he tweeted in January 26 Gamestonk with the link Wall Street Bets subreddit on there, and the stock skyrocketed, right? He tweeted about Doge, and Doge went from like 1.001 or something to 8 cents. That's a crazy return of your investment. But it's
Bitcoin too. He did the Bitcoin one.
Right? He added Bitcoin to his Twitter biography.
That was an interesting one. Let me pull that chart up because it was very short lived, and it shows how fragile the Bitcoin market is right now. Because if it shoots up just because of a guy's tweet, like in a day, let's see when that peak, that huge come up. It was on Friday. So right here, look at it. So he tweets it on Friday. It was at 32. Then it shoots up all the way to freaking $38,000.
That's so much money.
Like, that's huge. That was on Friday. $38,000, and then it drops back to its consistent 33. But it shows how basically fragile this market is, especially Bitcoin. It hasn't been matured as much, and in a sense, I think Elon Musk is incentivized to play this game, and this bubble game, in a sense, because GameStop is not going to be able to be at $400, or when it gets to $1,000, not going to be able to maintain that valuation.
No way, it's not gonna be
for long term. Bitcoin, maybe I do believe in Bitcoin, but at the same time, I don't necessarily have a lot of faith in maintaining a certain value, like a value like this, for too long. It could go to 100,000, but it can't stay at 100,000 forever. So maybe I'm wrong, but I think Elon Musk, and this is also in the words of Peter Schiff, Elon Musk is kind of incentivized to play the game of increasing or expanding the size of the bubble or inflating the bubble, because in a sense Tesla is kind of like in that realm. Like if he kind of tries to deflate or pop the bubble, then he ultimately gets affected by that negatively too, because if you pop the bubble for Bitcoin, you pop the bubble for GameStop, you pop the bubble for Dogecoin, then you also in effect pop the bubble for the stock market, and the stock market affects Tesla's share price, which is also increased exponentially.
So why does he do it then?
Because you play the game. No, because you play the game until the music stops. I mean, it is at the end of the day like musical chairs. I mean, we've seen it before.
It's still doing phenomenal. Tesla.
Oh, Tesla's doing great. I mean, I love the company. I think the bubble still hasn't. It's still inflating. But if you look at something like the .com bubble, which happened in March 2000, 2001, I think it was when it popped. Look at this graph. So pretty much, this is, what is it? Oh, this is the NASDAQ. So this is all the tech stocks that were huge. So the .com bubble, for those of you who don't know, is when the internet was first starting off. You just heard what .com is. So anything with a .com, people were throwing...
.nets.
No
.ios.
Well, it was mainly
.com.
.cos.
It's .com.
So seriously, people were throwing money at anything with the ending of .com. Like hundreds of thousands of dollars. And you can see the NASDAQ got to a peak of 5,000. And when it got to that peak, it just dropped. And it hasn't got up to this $5,000 peak since. Actually, I might be wrong. Let's see the NASDAQ since 2000. NASDAQ composite. So we'll look at it from 2001. 86, 2001, March.
And so all this volume that's coming into the markets right now is overwhelming.
My mistake.
To start up like brokerages like Robinhood and Webull. And so they come into this liquidity issue, right? Because there's so much market. I mean, you were telling me earlier today how a lot of we just reached like record highs in the amount of retail money this year.
Oh yeah, let me pull up that graph. So 36% of the U.S. equities are owned by households. So people like us, like retail investors, or the poors, in a sense, and then 3% is only owned by hedge funds.
which is not much.
And then the rest is owned by the top 1%. So, and out of I believe there's like 500 trillion. Let me see what the number is of the total U.S. equity market value.
And so we're seeing records in the amount of trades, the amount of shares being traded that we've never seen before, ever. This month has been crazy in terms of records broken for volume, all because influential individuals like Elon Musk and Ackman and DFing Value, they just have the power to influence people to just all put their money into one bag. And so we can talk about Robinhood's issue now, because now we understand that backstory. Robinhood had too much volume going on, and
sorry, just before you start, it's $57 trillion is the value of the total U.S. equity market. Just to say, so the households own 36%. Just want to say that.
And so I'm just gonna go ahead and talk about
the Robinhood
thing. So the DTC, the Depository Trust and Clearing Corporation, they service intermediary for all your trades. Trades settle in 2 days, right? So if you buy today, you actually don't get your money until Friday. Maybe Robinhood gives you your money immediately because of immediate trading.
They front you the money.
Yeah, exactly. But they are taking a risk by doing that. The DTC's role is to guarantee that these trades fully execute, right? So that if you buy a share, you get your share, and if you sell it, you get your money. Whenever you do a trade, though, the DTC requires from the clearinghouse, or the brokers go through the clearinghouse, like Robinhood goes through a clearinghouse. Fidelity, I think, has their own clearinghouse. The clearinghouse has to then front about 2% of the trade's value.
Well, but real quick, just before you continue, Robinhood, because you mentioned TD Ameritrade, Fidelity, they have their own clearing houses. Like, they are a clearing house, so they can process these transactions themselves, so they don't have to pay any third party. Robinhood, because they're a tech startup,
they're new, they don't have that much capital to work with. They don't,
they just have a third party. They outsource that side of the business, so they handle all the techie swipe up, really
clearing house as a service, or CHOCH
as a service. It's a CAS.
It's a CAS. Yeah. So the clearinghouse has to front about 2% of the trade's value to the DTC. Let's say Apple costs $100 right now. That means so that when you buy a share, the clearinghouse has to send $2 to DTC. That's 2% of 100. That serves as collateral in case something bad happens. I don't know what that bad thing is.
It's sometimes Robinhood gives you instant deposit. Like I say, if I deposit $500, that takes 3 days to get to Robinhood. But Robinhood says, hey, here's an instant $500, so you can start trading now. And so, but sometimes that's why the collateral is there.
It's all credit.
It's all credit in the sense. That's why the collateral is there, because if, say, after those 3 days that I deposited that $500 and it doesn't go through, Robinhood holds the bag, and what they'll do is they'll sell your shares or whatever, and so that collateral within the clearinghouse is also security that doesn't happen, to Robinhood or to them.
Right. So with that in mind, what happened with the volume of GameStop being so high was that the DTC had to raise their collateral from 2% to nearly 100%. Right. If GameStop was trading at around $300 to $400. That means that the clearing firms had to send 100% of of those trades' values as collateral. So instead of 2%, which 2% of 400 is, I don't even know, a small amount, they have to send the whole amount. And there's a lot of shares of GameStop being bought. I mean, look at the price. There were a lot of shares of GameStop being bought. So a small brokerage like Robinhood or Webull or Public, they don't have that capital to just front to the DTC.
What happened at Clubhouse when Elon Musk and Vlad were talking, basically what he alluded to, which basically Elon Musk had to beat it out of him, but he was saying that it was just too high of a price to pay. It was like $3 billion or something, where they would have to pay in order for the clearinghouse to allow them to trade these stocks. So better than them paying that price because they didn't have it. They both basically said, hey, we're going to stop just letting you buy these stocks. They paused it. But you can only sell them.
So you can only sell them. People were upset about that. They were like, why can't we buy, but we can sell? Well, if you can't sell, that is way worse, right? If you see the price of your stocks going down and you can't do anything about it in regards to selling, then that's just that doesn't help anybody. So we would have probably been way more upset if that were the case. So I'm glad they at least let us sell. I'm not glad that they didn't disclose this information as soon as they blocked buying, because that would have, saved a lot of anger in the media. But nonetheless, that's what happened.
Vlad could have done a better job at opening the dialogue and talking to his customers instead of doing this BS ring around lawyer PR talk, because it really just made it seem as though he was beholden to these clearinghouses. And if Citadel, for example,
and then we had all these conspiracies coming up. Yeah, like Citadel, like telling them not to, let us buy. Because you could have avoided all of that.
But think about it, because Robinhood is free, right? So to us, to users who trade. So if Robinhood is free to us and they don't make money from our trades realistically, then we are the product.
Right.
So who are their customers? The hedge funds. The hedge funds are the Robinhood's customers, because they pay Robinhood in dollars and cents for that order flow to fulfill those orders. So if now these hedge funds are costing, this is just a conspiracy though, I'm not saying this is true, because honestly I'm not trying to be slanderous, but if, for example, now Robinhood and all the retail traders are costing Robinhood's main customers, the hedge funds who are paying for this order flow, or paying them for the order flow, if they're costing them money, then there could be, speculatively saying, that Citadel was like, hey, our boys over here at Citadel and Melvin Capital, because we just lent Melvin Capital a bunch of money so they don't go bankrupt, our boys are getting crushed, you need to stop the trading. So that in effect could also be like the clearinghouses raising that admission price to $3 billion to trade these stocks, which they knew Robinhood didn't have. On average, they probably have to pay $300 million in order to allow these trades. But Citadel and all these clearinghouses do pay them for that order flow. So if you kind of think about it like that, that is could be a conspiracy theory in a sense. But it just seems more like they just couldn't afford, because they aren't a clearinghouse, to transact these specific high-risk stocks.
Yeah, and listen, I get it. I get $3 billion waking up to that, that's a lot of money, and I understand they were able to work it. They called the NSCC and they were able to work it down to 1.4 billion. That was still a very high number. So in order to get it down to 700 million, which was the final amount that they had to put down for collateral, they had to block that entire day. I believe it was Thursday last week. They had to block that entire day from people buying these securities. And then they were able to raise $1 billion
from their credit lines, which is from the credit lines,
and then they resumed trading the securities, but very limited. So there was at one point you can only buy one share of AMC. Like, yo, get out of here, dude. That's nothing. Do I believe they could have done better? Absolutely. I think Robinhood is a very renowned company at this point. They're a pretty lucrative brokerage, and they shouldn't have had a problem finding investors in a short amount of time. I think they could have easily covered that $3 billion collateral to keep providing us, their users, with the shares. I mean, they did almost a social suicide, and it didn't have to come to that point.
Right. I mean, but also we've seen that the system, it wasn't built for pumps and dumps like this. It's like kind of crazy.
Yeah.
I mean, look at that growth. That is absurd. This isn't a month.
But also, this wasn't, this didn't happen all of a sudden. This was seen that it was going to happen. This was in development.
I mean, Robinhood has messed up a lot. I mean, remember the corona, like the whole virus thing? Like they could not trade on the most volatile day. Like people could not trade when the market was dipping.
And every morning, like your options aren't even up to date. You have to wait. It's like all glitchy. Your stocks are just fluctuating everywhere. One morning you can have like over 100 times your money, and the other morning you're like down 100 times your money, and then you're like, whoa, what's going on? And then it just comes back to normal.
Well, and also
stuff like that shouldn't be happening to brokerages.
And in effect, too, like, when Robinhood stopped the ability to purchase shares, that indirectly affected the stock price, because when people stop buying the shares, it doesn't allow the price to go up, because
and most retail investors nowadays are on Robinhood.
Right, the majority of them, right? So, and I mean, if it's 36% of households who own U.S. equities and only 3% of that total 57 trillion U.S. equities market is owned by hedge funds, then that has a pretty big impact. And so it actually furthers the conspiracy as far as like, yeah, maybe there was a backroom deal. They're probably gonna have to get a slap on the wrist because people are suing them. But still, at the end of the day, they're gonna get away with it. There's no proof. There's no actual evidence. And Meet Kevin has a fantastic explanation of this about like the lawsuits because he knows a lot about that. But you know, there's just no way for them to really like get in trouble, and no one's really gonna go to jail or anything like that. It's just, I would really like to see someone go to jail for this, but still, can't.
Yeah,
it's not gonna happen.
Yeah, unfortunately.
Jordan Belfort put out a video to pump up the Robinhood traders. You want to watch it?
Yeah,
real quick.
Watch this.
All right, JB here, the real Wolf of Wall Street.
Okay.
This is to all you Wall Street bettors, Robinhooders, day traders. It's a message of love, respect, support, most importantly, encouragement, because you all need to hear this right now. And so does Wall Street. You know,
I just have to say he's kind of older. So I mean, like, and Leonardo DiCaprio really played this part well in that scene. I mean, I think he's got. Like, let's keep watching. He's got the energy. I like it, but I don't. You decide.
For years, I've been telling you guys to never take no for an answer, right? To never stop trading, to hold the line, to keep squeezing the testicles of those dastardly short sellers until you get what you want, because you all deserve it. To never stop squeezing them by the balls until they're forced to either buy or die. And now, this shit that Robinhood is pulling on us now, stopping us from trading, barring us from their platform, our home, the home that we built. What the is that, you know? Well,
Yeah,
I'll tell you what it is. It's Wall Street. It's the hedge funds. It's fucking Robinhood being fucking hypocrites. That's what it is. It's them trying to squash us, the little guy, to put us all back in our places instead of the other way around, like we've been doing to them. So, you know what, Wall Street? You know what, Robinhood? We're not leaving. We're not leaving. We're not leaving!
So
hold the line. Hold the line, man.
So, like, I mean, it's basically recreating that scene from Wolf of Wall Street. I mean, it's great. I think it's really motivational. Very, very good promotion that he did there. And it's true. I mean, we all kind of know what's going on, but we can't prove it.
Right.
I honestly am on his side in this sense, in the way that he sees it, because we all know, like, what are the odds? Like, yeah, sure, the effects might have been. It's all the details that are released. I mean, reality is that yes, these hedge funds were losing a ton of money, and so I do think, and this is just speculation, this is just what Jordan Belfort just said, that yeah, that's them. They're trying to put people back in their place, because it certainly seems like that. And I think Robinhood is like, they're not even strong enough to like fight back. I mean, they couldn't even come up with the money. So I mean,
we don't know how hard they tried.
I don't know. Jordan Belfort, you know, I mean, his reputation's a little bit wishy-washy, but hey, you know, he knows how to sell. He's a great public speaker. And I thought that was really funny that he put that out. But hey, it's
Want to talk about Doge?
Doge. No, dude, there's nothing in Doge, dude. I don't actually. I know the backstory to Doge. Like, you know,
I know how Doge works. We can talk about that.
I mean, I think Dogecoin. Oh, I don't even think that's how you spell it, right?
No.
How do you spell it?
DOGE.
DOGE.
Yeah.
So it basically comes from, isn't a middle school teacher's like dog that she posted, and the caption was supposed to be, scary or something, and then like it actually read scared.
Oh, really? Is that actually the origin
Doge
story?
Origin.
I have no idea what the origin story is.
Yeah, the origin story is interesting.
I thought you were talking the origin story about the coin.
So pretty much became popular in 2013, and the meme typically consists of a picture of Shiba Inu dog accompanied by multicolored text. The meme based in 2010 photograph became popular in 2013, being named Know Your Meme's top meme of that year. Cryptocurrency based on Doge. The Dogecoin was launched in December 2013. But let's see the meme. Referenced by members of the United States Congress. Doge uses 2-word phrases in which the first word is always 1 or 5. Well, but let's see the origin of Doge. Like Doge meme origin. You see, I mean, there's a fundamental problem in the market right now for like these things to be going up. This like I think the $10 billion market cap, right?
It's pretty big.
It's pretty big. The story
I
of
don't think it's
Doge
10
meme
billion.
begins in February 2010 when Atsuko Sato, a Japanese kindergarten teacher, posted photos on her blog of her pet dog Kaboso. So she was a kindergarten teacher. Doge meme exploded from there, featured numerous Photoshop images using the caption. All right, but let's see why it was so funny. It's literally because I think she wrote incorrectly. The story, one of these, her blog, side along, specific photos using reference to Doge photo. So the caption, LMBO, look at this freaking Doge. Oh my God. So it blew up because somebody referenced it and was laughing, and they mispronounced it in a sense. Let's see how they say it. Doge. See, that when you write it with a DOGE, it is Doge. It's pronounced Doge, but this is dog. So Easter egg. So it became popular on YouTube. Well, I don't know where I got that part where the caption was like supposed to, but whatever. Let's see the chart for Dogecoin and how much it's actually increased. Doge price. CoinDesk.
So Dogecoin is currently at 3 cents, and I know a lot of you guys want to see it at $1. Let's do some math real quick and see how much money has to go into Dogecoin for that to even be possible. So the market cap right now of Doge is 9 billion. How many Doge are there? How many Dogecoin are there right now?
That huge pump when Elon Musk referenced it, it went all the way to 5 cents.
So there's 113 billion right now. If we just multiply
6 cents
times 0.03.
The market cap is 4 billion. Dude, $4 billion for a coin that does nothing. It's just a joke.
It's 4 billion. It says here 9 billion.
Well, it says the market cap here on CoinDesk is 4 billion.
Oh, that's probably more accurate.
On CoinDesk, yeah. It's more active probably. But 4.64 billion transactions in 24 hours. That is absurd. Does it tell you? Oh, the supply, 128.6 billion. So if in order for it to get to $1, it needs $128 billion, right?
No, if it's at 3 cents and it's $128 billion.
Oh, so we subtract the difference?
I think so.
So we do 128. So we do 128 billion times 3 cents, which is basically 4.6 billion. So we do 128 billion minus 4.6 billion. So we do, yeah, so basically we'll do 128 billion divided minus 4 billion. So it needs 124 more billion dollars to get to the $1 market cap.
That's a good amount.
That's a lot of money. That's like way too much
more than
money.
Ethereum's market cap.
I don't
right
think
now.
there's enough money in retail traders to like, or I don't think retail investors are willing to put in that much money into a coin that literally has no value.
Right, because that's more than Ethereum, and Ethereum has so many developers behind it and so many projects in the works, and it's actually like a functioning utility.
Dude, but I could be wrong though, because you know we did not expect GameStop to go so wild. It went berserk.
My gosh,
it went berserk. So it's totally possible. It's possible.
But don't listen to us. We're not financial advisors.
Oh, we didn't mention that in the beginning. Yeah, you will lose money if you listen to us.
You might actually lose money with this one, though. So, just be very careful.
Yeah. And also,
I personally have a small position in Doge. I don't know about Peter.
No, I'm not in it. I burned that one. That was like nowhere. But also, interestingly enough, there's so much margin in the market. There's like $800 billion in margin that is being used, and it's increased 62% since March of last year. So that's also a problem. People are trading these very speculative, risky stocks with margin, which margin is like just debt. Like you're basically borrowing money from your brokerage.
It's a loan.
Yeah, it's a loan to
loan.
buy stocks, and people are buying GameStop and all that stuff. And that's what happened in the dot-com boom. I'm not saying that's going to happen, but I'm not saying it's not going to happen. I just don't know when.
So you're not saying anything, really? You just canceled yourself out.
Well, I'm saying something. I'm not predicting anything in a sense. So it's a pretty interesting time in the market. And this whole situation just basically showed us that there is a fundamental liquidity problem. And liquidity means cash available, like to be able to trade or collateral and stuff. There was a problem because it wasn't just Robinhood who halted the stocks. Other brokerages had to do it too because they didn't know what the heck was going on. So
yeah.
Pretty wild stuff. And, the Fed puts out a financial stability report. And one of the things that they put out in November 2020 was this really interesting, this one, it talks about the framework. And so it says a stable financial system when hit by adverse events or shocks like a pandemic or a war or the crash of GameStop, if that ever occurs, continues to meet the demands of households and businesses for financial services such as credit provisions and payment services. In contrast, in an unstable market, these same shocks are likely to have much larger effects, disrupting the flow of credit and leading to declines in employment and economic activity. So we're in an unstable market, 100%. 100%.
It doesn't make sense right now.
It's so speculative. People are just bored and they just want to bet. And so
it's a casino out there.
The research here is a result. The framework focuses primarily on monitoring vulnerabilities and emphasizes 4 broad categories based on research. For those of you who don't know what the Fed is, it's a Federal Reserve. They basically are in control of like interest rates and pretty much bail us out like what they did. I mean, you probably already heard about this during all of 2020. You found out what the Fed was. But elevated valuation pressures. Valuation means the value of a company. So elevated valuation pressures, i.e. GameStop, it's like $10 billion right now. What's the market cap for GameStop? It should tell us right here somewhere.
I read somewhere that they wanted to start putting rules where you can't buy, like price fluctuations in a stock cannot happen unless there's fundamentals behind it. I'm like, how are you gonna prove that, first of all? And second of all, no.
Look at that.
No, absolutely not.
15 billion. $15.69 billion is the market cap for GameStop right now. Which it did get to 20 or something. It got close to that. Or it did definitely.
Is it no, but this is
now.
This is before after hours.
Well, 15 billion is crazy. So basically what the Fed is saying is, the framework focuses primarily on monitoring vulnerabilities and emphasizes 4 broad categories based on research. So these are the vulnerabilities and indicators for non-stability in a financial market. Elevated valuation pressures signaled by asset prices that are high relative to economic fundamentals, being how much profit or revenues do you have? And GameStop is not doing much of that, and often driven by increased willingness of investors to take on risk. Just like right now, we're taking a lot of risk on basically just out of principle because we want to bankrupt hedge funds.
The thing with this is that people are gonna get hurt. There's gonna be a lot of blood.
Yeah.
There was already a lot of blood today, February 1st, in the
Yeah.
market with GameStop, because in order for you to actually win, you have to hold GameStop for forever, right? And that's just simply not going to be the case. People are just going to take their profits and dip. But in order,
deep effing value today, he lost $5 million.
Is he still holding?
Yeah.
Nice.
And he lost 172,000. He definitely probably sold some. No, I think he's definitely holding. He's leading the movement. But he lost a lot of money. But he's made more he's still sitting on $21 million of gains.
That's incredible.
But he's lost $5 million today.
Those are excellent returns.
Yeah, but he's holding since 2019. But you're saying, yeah, there's definitely going to be someone holding the bag.
Yeah. Someone's going to be left holding the bag, and it's going to be, well, not somebody. I mean, in this case, a group of people are going to be left holding the bag. Because they can't hold it forever. you can't.
No, you can't. It's just
the hedge fund. They're gonna win. They're gonna short it at some point. It's gonna make them profitable.
It's just there's no way GameStop can justify this valuation of $15 billion when they don't even have profits right now. Like they're not even really selling much. It's just their stock price. And even if someone's gonna sell, and it might not be the retail investors, but it could be GameStop. Like they could issue new shares, and that could dump the price. Because there's more, there's dilution in the stock prices, meaning that if you put more water in red liquid, eventually if there's too much clear water in there, the red liquid's gonna be diluted and it's just gonna be clear water, and you're not gonna be able to taste the Gatorade or whatever you were drinking. So at the same time, it's someone's gonna sell eventually.
Yeah, there are more bad things at this point that can happen than there are good things.
And it just seems like they don't care. People don't care. At least the people on top are gonna make money. I mean, this guy lost $5 million today, deep effing value, but he's still up $10 million, $21 million. Like that is 2,810%. Like that's still huge. Like he's still gonna be fine but maybe he doesn't sell. Maybe he stays strong to his principle, but. I don't know, man. These aren't real numbers until you sell. Those gains aren't real until you sell. So, anyway, going back to this Federal Reserve thing. So basically, valuation pressures are one of the aspects of vulnerabilities that tend to build up in a financial market because there are always indicators and things that show up. It doesn't just happen out of nowhere, like that markets go down. Another one is excessive borrowing by businesses and households. Now, we mentioned 36% of households own the U.S. equities. The total 36% of the U.S. equities market is owned by households. So what does that mean? And then also margin increased 62% to $800 billion. And people are putting their money in these risky assets. So it leaves people vulnerable to distress in their incomes if their incomes decline and they can't pay the interest. Because when you borrow money from anyone, they're going to charge you an interest rate every month. And especially with a brokerage, I think Robinhood's 5%, TD Ameritrade's around 9%.
With their margin?
With the margin, yeah.
And so if you're really deep in the red, you not only owe them, but you start owing the interest as well.
Yeah, no, you pay the interest anyway. But yeah, if it goes below a certain amount, it'll tell you your portfolio goes below this amount, they'll force sell for you in order for you to pay back the margin because they want to get their money aside from the interest that they already charged you. So if people become vulnerable where their incomes decline, that's where the Federal Reserve is saying, or assets fall in value, i.e. if you're buying a 1-to-1 margin with GameStop, if you put in $50 or whatever, $100 for GameStop, and they let you borrow $100 to buy the other half or the rest of the other stocks, and GameStop falls 30%, you're left with having to pay that with your other stocks that you have, or you have to pay them that money back.
Yeah.
Ideally, they have some algorithms that would sell before. And in the event of such...
Well, I think that happened too when they halted trading. They were just selling people's stocks.
That did happen, yeah.
But there was people that had it on margin, so...
Yeah, those guys...
It was basically their money to begin with.
Yeah, and Robinhood was saying, oh, it's for your own good, and blah, blah, blah.
We're trying to protect you.
Yeah, my ass. They're just trying to protect their own selves. So, but so these are high debt burden. It's like a credit card, you know, like if you spend a ton of money on your credit card and suddenly you lose your job, how are you going to pay that credit card back? They're going to start repossessing some things that you bought. Another thing is excessive leverage with the financial sector. Okay, so we basically, I think we commingled these, but these are pretty much the same. So we're talking about margin. This is more emphasizing the margin, and here's emphasizing credit card debt and stuff like that. And then funding risks. The funding risks expose the financial system to the possibility that investors will run by withdrawing their funds from a particular institution or sector. Many financial institutions raise funds from the public with a commitment to return their investors' money on short notice. But those institutions then invest much of the funds in illiquid assets that are hard to sell quickly or in assets that have a long maturity. This liquidity and maturity transformation can create an incentive for investors to withdraw funds quickly in adverse situations. Facing a run or a bank run, financial institutions may need to sell assets quickly at fire sale prices, thereby incurring substantial losses and potentially even becoming insolvent, bankrupt. Historians and economists often refer to widespread investor runs as financial panics. So, like when the virus hit, people were really scared. I mean, obviously we didn't have such a big problem because the Fed was just like, here's $2 trillion.
Yeah.
Just stop crying. But it was still messed up. So these are some vulnerabilities that I am starting to notice in the market. Goldman Sachs also is putting out some stuff like that. I know they're suits, but they do have smart people there who are researching this stuff. But man, who knows what's gonna happen?
No one knows what's gonna happen.
Yeah,
It's unstable right now.
I mean, we kind of we know what's gonna happen, but we don't know when.
Yeah,
that's like the thing. And maybe it never happens.
Is the squeeze gonna get squished? Who knows? I don't. It didn't look like it today. I thought today would be the day, but some people are saying Wednesday. Some people are saying Thursday. We'll see. People have to start buying back their shares at some point.
For real, dude. Or selling their shares. Is that what you're referring to?
No, the short sellers have to buy back their shares.
Oh yeah, so Deep Effing Value did say that it hasn't even started. Like the short squeeze hasn't even started. So he was saying hedge funds are using a short ladder attack to push the prices down. But what does that mean? It practically means that a big hedge fund are putting lower and lower bid prices between themselves, and as a consequence, the stock is being pushed down on paper. But how can we know this? We know this because there's little or no evidence on those trades, which is exactly what was seen today on GameStop. But why are they doing this? Because they're losing, and they are aware of the fact that they will literally keep losing billions of dollars if the price will inflate or stagnate. Their strategy is quite simple. Fabricate fake a decrease in the GameStop price, pump it out all over the news in order to scare us, pump out even more lies on the news saying the drop was due to less interest in the stock, which is false, no one is selling, and use a decoy silver to make us think that Wall Street bets are now pouring our money into silver, which is false. How do we fight their attack?
I don't think they're actually using silver as a decoy, though.
I mean, it could be because you see a lot of the news media saying like, "Oh, suddenly they ditched GameStop and now it's all about silver." But you see the Wall Street bets pages like, "Don't listen to these losers. Like they're not talking serious."
Yeah, but it's also these hedge funds are dealing with a bunch of people's money. They don't want to really just put a lot of effort and money into advertising this decoy. That's really risky because it might not even work. You know, it's clearly not working if that were even the case, and they're not willing to really be putting all these people's money into that position. They're dealing with pension funds and endowments. Why would they be like risking that money to try and create a scare tactic for these Wall Street Redditors?
Well, I mean, they work together, hedge funds and media companies. Because I mean, how is Bill Ackman able to get on like CNBC or the news all the time?
That's a good point. Yeah.
And I mean, at the same time, hedge funds also manage, like how you said, pension funds. These are people's retirements. You know what I mean? Like if all the hedge funds go broke, like your parents' 401ks or your 401ks also could go down the hole. Not necessarily, but if they manage it, like let's say if Melvin Capital was managing like CNBC's,
50%.
Yeah.
So
yeah, they're being stupid. So stupid. They're being stupid. But I mean, if like if Melvin Capital was managing CNBC's pension fund or had a portion in it, like, you know, the incentive of them to like, I'm not saying that's happening, but it's just to get the idea.
Or it could be happening. We don't know.
But he's saying keep holding, and then he's like, but I don't know. I'm not a financial advisor, and he likes the stock. See you all on the moon. So very heartwarming post from Papa Deep Effing Value. Selling is not an option. Trading platform Diamond Hands. So yeah, I mean, we heard it from the man himself. It's pretty cool. I like the movement. That's for sure. I like the movement.
Yeah, I'm definitely behind the movement as well.
Yeah.
It's history. Yeah, there's a lot going on. It's very. We covered a lot too, man.
Right? Yeah, we definitely did.
It's almost an hour.
Yeah, 15 minutes. Well, we'll you want to end it here? Or?
Yeah.
Okay, for sure.
Thank you guys for listening. I hope you learned a lot about everything that's going on and about definitions that you may have seen around but not fully understood till now. And if you're holding AMC, GameStop, Nokia, or any of these meme stocks, just be well aware of the risk involved. And yeah.
And you will lose money if you listen to us. So hold the freaking line. We're not financial advisors, but hold the line.
Diamond hands, baby.
Diamond hands.
No paper hands here. Nothing. I don't like that.
Check out our merch too. We need to sell it. So
yeah,
sell the merch.
We want this gone.
We want it gone.
We want it all gone.
We have new shirts coming on. Like we have new designs, and you're gonna love them. We'll release them later. So don't forget to subscribe, like the video. It helps a lot if you even stuck around this long. Peace.